Hello everyone and welcome to Crypto Atlas. This is an update video for AMC, the movie theater stock. If you guys are new to the channel, feel free to hit subscribe, hit the thumbs up like button, and feel free to share this video on social media if you think other people are going to find it to be helpful as well. So I got a couple things I really want to touch on today, and hopefully this will provide a lot of good information for you guys. Please keep in mind, I'm not a financial advisor. Everything I'm sharing is my own opinion, it's my own research, and I highly encourage you guys to go out and do your own research. Okay, so let's go ahead and take a look at this, guys. One thing that I want to note is when you take a look at AMC movie theater stock, right now, what am I looking at? Right now, I'm looking at the weekly. So I'm going to go ahead and pull back for just a second here, looking at it on the daily. And this bottom level support line that we were having established, today it did drop down lower once again. We're seeing the volume on the daily at 85.85 million. As you guys can see, the volume right down here, it is still very low. We're waiting for some high-level activity. A lot of suspicion suggesting that there's all this activity primarily taking place over on the dark pool. Taking a look at the information on the dark pool, there are 238 million shares of AMC that's being reported, being moved around, taking place on that of the dark pool system itself. So yeah, there's still a high level of activity that's actually taking place there with 85 million in volume taking place. So absolutely ridiculous on that end. As far as the AMC short interest, they had a little bit of an update here. So let me just go ahead and clarify this. Again, this is what's reporting for old data that's been a little bit more elaborated on than they actually go further on. So they're saying the estimated short interest in AMC has been updated to reflect the new exchange data that was released yesterday for the 30th of June. So that was about 2 weeks ago. That changed down to 15.38%, which we've been seeing it right around 20%, guys, of free float does not reflect changes in shorting since yesterday. So they even stressed it, right? This does not reflect changes in shorting since yesterday. They're referring to the stuff from June 30th there. But then they went on to say this. Check this out. Between the last reporting periods, the 15th to the 30th of June, an additional 8 million AMC shares were borrowed. During the same period, the exchange reported a decrease in shorts by almost 10 million. This is a very unusual pattern. They are straight up saying that things are not making sense right now. These are the people that report the data. Keep in mind that they're being provided the information from the retailers, and so they can only report whatever it is that's given to them. But they themselves are saying, I quote, "This is a very unusual pattern." There's some shenanigans that are very likely going on, guys. The numbers don't add up. You know, you have a certain amount of shares, you have a certain amount of expectations on things. You're seeing more inflow for purchases than there are outflow for things. You're using comparative metrics of everything, and like everyone that I'm seeing is holding on. I'm buying more. I haven't been selling. I've been buying more as this continues to drop down. And there's discussions about some of the tactics that people are doing, the hedge funds especially, and how they're just kind of kicking the can down the road with these margin calls so they can actually get new money pulled in. There's multiple ways, if you guys weren't aware of, and how margin calls can actually be basically taken care of. There's, I believe, 4 different ways. And one of the ways that they can have that is bringing in new funding so that they can extend their timeline. And so I believe, and a lot of people believe, that's what's taking place here. And I want to compare in here just a second. You guys are going to see, I'm going to compare AMC with Volkswagen. Some really interesting things that of what I've noticed with there, and I want to get your guys' opinions in the comments down below. So with JP Morgan, there was an article that came out. This is actually posted in the SafeMoon subreddit, so you don't have to pay for that like premium fee in order to read the article. So this is what they said. JP Morgan is warning hedge fund clients that it will demand they post more cash at any time during the day if their trades lose value. The biggest United States bank by assets called clients of its prime brokerage division in the aftermath of the collapse of I don't know how to say this name, I'm sorry. Archegos? I have no idea. Capital management, according to 3 people familiar with the matter. JP Morgan told the hedge funds and family offices that they would have to post more collateral on their single name equity swap positions if they lost value intraday. It then goes on further to say, and this is pretty interesting right here, none of the hedge funds that Risk.net spoke to, this is where the website article came from, spoke to have received intraday variation margin calls from JP Morgan. But they all fear that they will have to pay up in the future. The chief financial officer of one U.S. hedge fund says that he was shocked when JP Morgan said it would exercise its legal right to make margin calls multiple times a day. And then it goes on with the quote, "I have worked at small firms and multi-billion-dollar firms, and this was a first," he says. "I was surprised to hear this." Well, maybe you shouldn't be doing all these crazy shenanigans, right? I mean, when you're banking so heavily, and literally you're making money on the fact that these other businesses are going down, you're driving the market in a specific narrative to fuel your own personal gains. It makes me sick to my stomach. It makes a ton of people sick to their stomachs that these people are so willing to fully demolish these businesses that are out there that many of us actually care for, and they're doing it for their own personal gain. It's just absolutely despicable. Now, if we go ahead and take a look over here on the charts, guys, what I'm going to go ahead and swap over to is now on the weekly. And something that I wanted to point out for you is let's go ahead and zoom this out a tad. So what we saw was a high right around $72.44, and it pulled all the way down to where it's currently at. It's actually down now at below 46.77%. We're actually seeing this now all the way down here to 48.61%. Even on the post market, what we're seeing it do is it's trying to go back to retest around this $35.70 range. Now check this out. If we hop over to Volkswagen, which a lot of people have been saying you can use what happened in the market with Volkswagen is a potential metric to identify what could happen with SafeMoon. I mean, it's not with SafeMoon. With AMC, I cover it SafeMoon in other videos. With AMC, when it tries to go on its major squeeze here. So what we saw was on the weekly, same thing, we're looking at this on the weekly, it had a high at $56.23, and then it dropped all the way down here to $25.64, which was about a 55% drop. And that 55% drop even dropped it down below this sort of median zone that we were seeing take place, where all of this was just sort of moving sideways in action, right? It was consolidating throughout that whole time period, and then it started to make its rise. Then we saw a big drop, and then we saw a massive, massive rise. So people are speculating we could potentially be seeing the same sort of thing, and they've been speculating on this for quite a while now. So let's say that 55% drop, where does that compare with where we are at currently with AMC? So from that high of where we're at now, we're seeing on the weekly this continual drop take place. It's not happening as fast as what happened with Volkswagen, but there's a lot of things that actually work in favor for AMC in comparison to Volkswagen that we're seeing. And so there's more suggestions to say that when this decides it wants to squeeze, it's just going to go absolutely insane. So, like we own pretty much the entire float, guys. Just keep that in mind. It's already been clarified on that. So if this was to actually go down further, which we were talking about at 55% or 54.6, let's see if we can get pretty close to that. 54.6 would put us right about at $32.92. So that's a little bit below where our barrier of entry to actually come in off of this major push was, right? This big establishment that we had off of this last line. If you really want to get nitty gritty, we can say that, well, yeah, but then look, there was all this consolidation that took place here, but then there was this sort of time period. Well, I'm looking at when this actual run really started to have this big, huge push. So we saw this kind of get established right here, and then a further push up down. From where we're at right now, it would push us a little bit down below that big bottom level of support line, which is so critical of where we're at right now. That's the thing where we need to really focus on, based on relationship to where we are right now. This is the major level of support. So again, we could potentially see this tap all the way down, guys, to around $33. If it goes any further than that, personally, I'd be a little bit shocked, but I'm not worried. You know why? Because the average short position for this is around $10 to $12. They're going to get margin called. You guys are seeing these things like with what's happening with JP Morgan, where they're saying, hey, we're getting ready to start cracking down. And the firms and stuff, they're like, wait, what? What do you mean? Like, you're actually going to start doing your jobs? No, I'm so surprised by this kind of stuff, So it's a waiting game for us. For them, they have to keep kicking the can down the road. They have to keep putting money into it. We're seeing all these synthetic shares being suggested. And that means when it comes time and they have to execute on making these purchases back into the shares, the price is expected to go absolutely insane. you're having so much borrowing compared to what's really out there. So guys, I'm gonna go ahead and wrap up the video there. I got referral links in the description for cryptocurrencies and for stocks. So if you want to get free money, feel free to look at those. See which ones maybe you're already signed up with and which ones you're not. Take a little bit of time. It's some free money for you. There's the comment section down below. I encourage you guys to voice your opinions. I get these stupid bots. They keep commenting on my stuff. And I'll be honest with you, it's a little bit sad for me when I go and I look sometimes at the comments section and the only comments I see are these stupid bots trying to promote these Telegram groups and stuff, which it's all scams. Don't go for any of that stuff, guys. All right, so yeah, feel free to subscribe, hit the thumbs up like button, really helps us out, and feel free to share the video. You guys are awesome. Thank you so much, and I'll see you in the next episode.